Questions over Chinese banks' balance sheets once again. Who knew?
Well, the issue with Chinese balance sheets, it's not just what's on the balance sheet, but also what's off balance sheet and is implicit debt in the system that's going to end up in the banks. And a lot of the sell-side analysts don't address this because, A, politically it's dangerous, and B, it's very difficult to quantify this. But the two examples that I would have show was the debt for equity swap, which we've seen, that could balloon significantly.
But these banks these bosses don't like this.
No, the banks don't like it because the banks do have a profit motive. I used to work for the Bank of China, and I respect a lot of the people who work there. So they're getting squeezed, but they are the lifeblood of the system. So therefore, they're the last recourse if the government needs to put cash in the economy.
So how bad is the debt problem?
Well, that's nobody really knows. But, I mean, the local debt is officially 24 trillion. My friends in China tell me it's more like 30 trillion. The debt for local bond swap is only 3 trillion at this point. And the whole point of that was to wipe off the loans. But in fact, they didn't wipe off the loans, so that ended up just adding more stuff on the bank balance sheets. But that's only 10% of potential liabilities. And the sell side has scrambling to keep up with this, but it's very difficult for them.
Outstanding non-performing loans, as reported by ICBC, is just 1.6%. I mean, that seems pretty low. Well, how bad is it?
The IMF came out with a report recently, and they say 650 billion is the official number, U.S., including special mention loans, but they put it at 1.3 trillion, so more than double. That does not even include other stuff, because the banks have something called investment products that have grown from 6 trillion to 11 trillion, and recently the sell side has started to write about this. That's stuff that nobody really knows what's in there, because the reason they're doing it is they don't have to have much transparency.
That's my point, isn't it? When is a bad loan a bad loan?
Yes, that's the point. But not only the loan book is the problem, but also these investment products mean they don't even have to say who they're lending to.
Right.
They can just say it's an investment.
So when does this all come home to roost?
That's the big question. A lot of fund managers ask me that question. There's a couple ways of looking at it. One is the credit to GDP gap, which is basically the growth in debt compared to overall trends. And people are now saying it's getting to alarming levels.
But at the NPC, government officials said it's manageable. But they'll say what they have to say. Well,
of course they will, because you know, China's different, basically. But essentially what you're going to have is China, according to some IMF and some other reports, is looking at near Thailand type of debt levels. And at some point, right now the corporates can't even pay, a big portion of them can't even pay the interest on their loans, much less invest in the economy.
So what is it telling you about the overall economy itself, I suppose? I mean, banks should be reflecting what's going on the ground.
Well, they are reflecting what's going on the ground, and essentially the government has been using what I call pools of capital. They use the insurance companies, they tried to use the stock market last year as sort of free money. The last big pool is the savings in the banks. And that's what they're now starting to tap. Eventually, they're going to reduce the RRR, the reserve rate requirement, which is quite high at this point. What you discussed this morning about the loan loss reserves, they're going to keep squeezing that. But at some point, they're going to run out of cash, and the economy is just going to start grinding to a very slow.
So reducing that, I used the air quotes for mandatory minimum. Reducing that, does that create more financial risks?
Yes, of course. But to me, that's only the tip of the iceberg. I mean, that's sort of fiddling at the margins. The amount of implicit debt in the system is huge, and it's gradually going to float through various channels like wealth management products and trust products and the rest of it onto bank balance sheets, because that's the only place left where there's cash. It's backed by the Ministry of